Jenny Horne is with us, co-host of Next Gen Investing, taking a look at Nvidia, which had a record close yesterday. We know that Jensen Huang has been visiting the White House. A lot going on here and exciting for folks who hold this.
It definitely has been exciting, especially when you consider the fact that now Nvidia is worth basically the entire size of the Germany economy, or like the entire sector, consumer staples or materials or utilities. I mean, some of these facts are staggering. It's larger than the bottom 220 S&P 500 stocks, market caps combined. So it has been a really historic week. It's been a blast to talk about as we've looked at a company that moved from $3 trillion to $4 trillion just in a matter of weeks. So that in itself has been astounding. But looking to open a bit more mixed today after we saw, again, shares close at $4 trillion for the first time yesterday. And a visit to China by CEO Jensen Huang could be seen as perhaps the next leg of enthusiasm. Nvidia, though, right now, first we saw that we need the permission to sell AI chips to China again. Huang did meet with U.S. President Donald Trump on Thursday, as you mentioned, before traveling to the People's Republic, according to various reports. But Huang has since said the Trump administration's restrictions on chip exports to China will cost his company roughly $15 billion in sales, and did claim that limits are counterproductive as they do encourage, actually, growth of the domestic Chinese AI industry. So in addition to making the case to sell hardware to China, it is likely that Huang and Trump have discussed the potential imposition of these wide-ranging tariffs and how that's going to impact the chip sector. So far, I think all of the fears we've seen were a bit overblown in regards to some of the specific tariff impacts, because we saw this mass pressure weigh on the broader semiconductors, but it was never expected to see the direct impact from some of the global trade turbulence. The exports are a whole different story, but I think that was interesting the way we saw that trade down on that concern. But a lot of these names, as Nvidia have brushed off that pessimism quite nicely. And while chips have been exempt from these levies until now, the U.S. president did say he would soon be announcing tariffs on those imported semiconductors, though he didn't specify a level or date. So that does still remain a bit of an overhang. But I mean, you look at Nvidia and you'd say, what overhang? Because it's been the unstoppable force. As we saw the initial unraveling early this year, it's now rallied 90% off of those lows at around 86.62 a share. All-time high, 164.50 a share, and we're now up about 20% on the year, Nicole.
And so, it's interesting. So it's been exciting for Nvidia, and there's still plenty of folks who think it has more room to the upside. They did get, what's interesting, Jensen Huang, right, has this China issue, and then Huawei was making a lot of chips, filling all the holes, and that wasn't good for Nvidia. But then they got a lot of Saudi Arabia contracts, I was hearing, because of President Trump. So it certainly seems like there's a lot of bright spots, coupled with AMD, which has made an incredible comeback off the lows. I saw 3 months, it's up 85, 3 months up 85%. Who wouldn't take that? The group, I guess, still has a lot of hot news.
I know, and I think the comeback of AMD has been important too, I think, to speak to the appetite of AI, because AMD has not been at highs since early 2024. And it has been, it was one of the early really cycle winners of all things AI. It was initially seen as the number 2 to Nvidia, and now finally starting to see actually this momentum hold. It's the first time in a long time that we've been able to say consistently we've been in a really nice uptrend in AMD. I mean, Micron as well, different space, but also following in the same world. And I think all encouraging that the definite appetite to clearly invest or trade in these names is fully back. I mean, helping boost all of this, Taiwan Semiconductor, which is the largest foundry business, also its largest customer being Nvidia, did just report sales growth for the quarter, preliminary, but also still about 40% from last year. So yeah, you're still seeing gains that match, I think, also a lot of this enthusiasm and honestly lofty valuations in all of these names.
All right, how about Tesla? When we look at Tesla, it's hot, then it's not. And people love it, the potential. And so now, today, after Elon Musk said, shut up, Dan Ives, I'm paraphrasing, what's going on with Tesla today?
I know know, my favorite tweet I've seen in a very long time, just because it was a hilarious response to what was, I think, many good points made by Ives as he was highlighting the Elon's pay compensation package, raising it to 25%, but then giving him more restrictions as a result of right now some of his political reign, which I kind of agree with there. But Goldman today lowering their price target on Tesla to $285 from $315 with a neutral rating as part of this broader note, specifically on U.S. autos and the industrial tech industry. They're raising their U.S. auto forecast to reflect more measured tariff levels than what had been initially proposed, even though they still expect auto sales in the U.S. to moderate in the second half of this year after pre-buying ahead of tariffs and what will likely be, in their opinion, higher pricing in terms of the right now second half of this year. So Goldman does still see U.S. auto sales at around 15.75 million and 15 million units in around 2025 and 2026 respectively, compared to forecasts that were actually initially slightly below those marks. 15.4 and 15.25 million were their previous estimates. So both figures actually raised. I think that right now you're going to continue to see, innovation from Tesla, but is that going to be enough to get their deliveries back on track, as we are still pacing for deliveries to fall for the second year in a row, which would be pretty historic. But it's a difficult right now auto environment as well, which Goldman does mention. And like you said, there's a lot of times I feel like Tesla just trades in momentum. It's like it swings one way and the pendulum swings the other, where all the bulls pile in, then the bears pile in. But that doesn't necessarily mean anything has changed from a business or company standpoint, because frankly, the bullish thesis of like autonomy and robo-taxis and FSD, that does still very much remain intact, despite Elon angering some with his political blowback online, of course.
Yeah, and the question is the EV battle. I mean, Tesla was the leader, and then all these other EV companies came up, but Tesla is so much more than just an EV vehicle car maker, But the penetration of EVs, is that going to continue? Is the demand going to continue? And that's what these companies need in the big, long run.
Yeah, absolutely. And to speak to that, the EV penetration has been, their market share in Europe has been declining rapidly. I've always said, hey, it's 3% of their sales. How much does it matter? But no, they have to find these areas to grow and to consistently dominate. Here in the U.S., from an EV perspective, they are still dominant. And if you look back at the second quarter, they did still deliver more vehicles than NIO, Li, and XPeng combined. They're still larger comparatively, but I think BYD, being the behemoth in China, has been eating away at that dominance. Model Y, though, for the month of June was still the best-selling car in China, as I believe, or their best-selling car. So there's still, you can find data points that support either thesis, of course, but they have to continue to find ways to grow, and that was where I think things will be difficult, and it's definitely not helping when he's going after the U.S. president.
Yeah. Jenny Horne, great to see you. Thank you so much. A lot of key names to watch.